Hello, good afternoon. Sage here, reporting live from Kalkine Studio. It's lunchtime here in Sydney and time for the Mid-Market Pulse. In today's show, we'll take a look at the overall Australians share market performance by the mid-session trade. So without any further ado, let's get started. And the Australian shares were trading near the day's high by the afternoon session as a slew of mergers and acquisition deals and firm global cues boosted market sentiment. The market gains were capped by a sell-off in the mining and banking stocks, while the mining stocks, especially the gold companies, dropped due to a fall in the yellow metal prices. Banking stocks tumbled following lower than expected earnings by index heavyweight Westpac. The investors also remained focused to the Reserve Bank's board meeting on Tuesday. The central bank is expected to keep the interest rates unchanged, while it may shift policy towards the next rate hike given the substantial rise in bond yields last week. By the afternoon trade, the ASX 200 index was up by 40.20 points or 0.55%. The benchmark index opened higher today and surged as much as 0.6%, tracking gains on Wall Street. And on the sectoral front, 9 of the 11 sectoral indices were trading higher, led by telecom and consumer discretionaries. The telecommunications services sector gained 2.1%, while consumer discretionary surged 2%. And among others, utilities, tech, industrials, healthcare, energy and consumer staples all traded higher, over 1%. Bucking the trend, financials was the worst performing sector with a 0.6% loss, followed by materials. And in the following segment, let's focus on the top gainers and losers by the mid-session trade. And the top gainers on the ASX pack were minerals exploration company Orocobre by rising 6.1%. Some of the other top performers were diversified financial group Janus Henderson, natural health business Blackmores, healthcare equipment manufacturer PolyNovo, and metal detection and mining technology company Codan. On the flip side, Westpac Banking, one of the country's leading banks, was the worst performer with a 6.3% loss. Some of the other notable losers were healthcare firm ResMed and gold mining companies St Barbara, Silver Lake Resources and Newcrest Mining. And on this note, let's now move on to the stocks that created a buzz on the ASX today. First on the list is a real estate investment trust Charter Hall Social Infrastructure REIT. Shares of Charter Hall traded 0.3% higher by the mid-session after the property trust announced the acquisition of healthcare and childcare properties for 58.4 million Australian dollars. The company informed its shareholders this morning that it has purchased a healthcare property in Heidelberg, Victoria, leased to a wholly owned subsidiary of ASX-listed Helios. It has also acquired 2 premium childcare assets located in southeast Queensland. Boosted by continued tenant performance, the company has also raised distribution guidance for financial year 2022 from 16.7 cents per share up to 16.9 cents per share, up 7.6% from 2021. Next is television and publishing business Seven West Media. Shares of Seven West Media rose over 4% after it inked a deal to acquire assets and business of Prime Media Group for 131.9 million Australian dollars. The transaction value of the deal is 57% premium to the last closing price of Prime Media Group shares on the 29th October 2021. Cheering the news, shares of Prime Media zoomed 74%. As per the deal, Seven West Media will purchase all the business and related assets of Prime Media Group via the acquisition of Prime Television's 7 affiliate sales and all their subsidiaries. The deal is subjected to a vote of the Prime Media Group shareholders, which will be held in December 2021. Seven West Media had announced on Friday that it had successfully refinanced its existing $500 million Australian dollars syndicated facility agreement, which will be used to finance the deal. And moving on to the next, shares of Westpac Banking Corporation dropped over 6%. The share price of Australia's Big Four bank fell after the lender reported lower than expected growth in annual cash profit. Cash profit jumped 105% for the financial year ended September 2021, driven by a turnaround in impairment charges and growth in mortgages. The profit, however, was lower than the definitive estimate of 5.5 billion Australian dollars. Net interest margin, a key measure of profitability, dipped by 4 basis points to 2.04%. The bank has also announced to conduct an off-market buyback of up to 3.5 billion Australian dollars of equity shares. The process will open on 17th November and close on 17th December 2021. The buyback will be offered to eligible shareholders who are registered holders of shares on the record date and have a registered address in Australia or New Zealand. And meanwhile, shares of Ramelius Resources slipped nearly 1% after the gold producer proposed a revised bid to acquire Apollo Consolidating. The company has made an improved unconditional recommended takeover offer of 62 Australian cents per share, higher than the previous bid and current offer from rival Gold Road Resources, each of which valued Apollo at 56 cents a share. The offer price includes 34 cents in cash and 0.1778 Ramelius shares per Apollo share. The revised offer pegs a total market value of Apollo at around 181 million Australian dollars, and Apollo's board has unanimously recommended the shareholders to accept Ramelius's offer in the absence of a superior proposal. The revised offer from Ramelius opened today, and Apollo shareholders have the opportunity to consider their position with a month. Ramelius has also entered into a pre-bid acceptance arrangements with another significant shareholder of Apollo and has secured a 19.99% stake in Apollo. Among others, AusNet Services shares today rose 5% after the energy company accepted Brookfield's 10.2 billion Australian dollar offer. A consortium led by the Canadian private equity firm Brookfield proposed an offer of $2.65 Australian for every AusNet share, higher than APA Group's offer price of $2.60 Australian per share. And last week, AusNet had agreed to grant due diligence access to APA Group while it continued to engage with Brookfield on its indicative non-binding and conditional proposal. The scheme values AusNet at an enterprise value of 17.8 billion Australian dollars. And if the scheme is implemented, AusNet shareholders will receive total value of $2.65 Australian cash per share, plus additional consideration if the scheme has not been implemented before 31st March 2022. And thank you for your company on that report, but that's all for now. Do keep watching Kalkine TV. Sage here, signing off.